Hey YouTube, this is Zach with Achilles Financial. Today I want to talk about Draftkings. This is going to be the third video where we've been covering the stock, and the first one since we started covering it when it was under $40 a share. Again, there's a lot of potential with this stock. So if you find this type of content helpful, please leave a like and subscribe. It really helps me to grow the channel and helps me produce more content. So let's talk about Draftkings. The reason why we've seen quite a big run up is because DraftKings just recently expanded their exclusive partnership with the NFL to include the country of Canada as well. Again, the company DraftKings, they make their money by having people utilize their app or their website to purchase additional bets that they get a percentage of, and they get a percentage of the payouts and the prizes. So think online gambling. You can see that over the past 3 months, we've seen quite a run up with plenty of up and down in between. This makes it a good flip potential for those of you who are looking to buy and sell shares in a swing trading fashion. So give a week, take a week. The thing that I want to highlight is that we do have earnings coming up on February 26th. And as you can see, the past few quarters have been pretty ugly in terms of earnings per share. Now, granted, some of this expectation associated with or is coming about associated with COVID, and again, for an app that derives most of its revenue off sports betting, you can understand why it's been difficult for them to grow at the same pace they have wanted to. Now, keep in mind, they're still growing at an incredible rate. If you look at the income statement perspective, in terms of revenue, we're seeing a huge increase over the 2019 numbers, but unfortunately it's coming at a pretty high cost when it comes to that total net income. The thing that I'm going to be watching for from an earnings perspective is, are their earnings going to be able to eclipse the difference between what they're bringing in and what they're outputting? The goal right now is to bring people onto their platform. So if this is a long-term investment, then it may pay out in the future. But right now, when you see total operating expenses of $481 million compared to $231 million a quarter ago, those are pretty huge numbers. So those are the things that I'm going to be watching for the earnings going forward is, were you able to actively grow users? Now, keep in mind that I do think that this, by the end of the year, is going to be a $100 stock, and I'm not the only one who shares that estimate. You can see here that the analyst consensus is basically where we're at today. I think what we could see if we see strong earnings potential is a move up from that point in time. Again, I do like that $100 price point, but keep in mind, a price target is for the next 12 months. You can see that right here. That is the expectation. So we're going to be watching this, and now let's go to their website and compare kind of what they're looking at in Q3 and what their expectations are for Q4. So as you can see, we're now on the DraftKings website. You can see right here that we've got the latest news. They are acknowledging the expectation that COVID-19 is going to continue to have an impact on their capabilities, but they still have a number of options available, including their big top item, their sportsbook. And then we've got daily fantasy sports, which is more in line with your fantasy football-esque type of approach. So there's a lot going on right here. What we're going to be looking at is here on the investor side. So today I want to talk a little bit about their latest presentations, which again, we're going to be looking at Q3 to see kind of what the expectations are. Just some of the reasons why I think that this is going to continue upwards is they have a lot of catalysts associated with it, including ARK Invest. ARK has continued to be buying into their fund, and let me just showcase that information for you very quickly. So ARK Invest, led by Cathie Woods, is one of the biggest proponents of innovation that we've seen, and really from a fund manager since probably the 1980s. What you're looking at here is someone who has grown rapidly ARK Invest from a niche ETF into a global powerhouse. They've had some massive income. Now, what you can see right here is this is ARKW. And what ARKW is seeking to do is to basically find companies that are internet-based or next-gen internet. As you can see, that includes mobile technology and Internet of Things, as well as e-commerce. So what you're going to be seeing here is, again, the B2B the C2C, consumer to consumer payments that they're going to be taking a piece of. So DraftKings really fits this approach really quite nicely, and ARK has been investing millions and millions of dollars over the past 2 weeks into this fund. So I think that this is something that is going to end up being one of the top 10 holdings, depending on if they increase this rate of buying. Again, you can see right here that there are some huge holdings in here, as little as 200 million. So there's still a ways to go from about the 50 million that we've seen invested in DraftKings so far. So now I want to take us to the investor presentation. So this is the Q3 2020. So again, this is last quarter. This is hindsight. Even the numbers that we're going to be looking at from February 26th are still at that point in time going to be right at 2 months old. So what are we looking at here? So right now, the key facts we want to look at is not even anything inclusive of these first items, but I'm going straight to the appendix where I want to talk about basically how are they growing and what is their potential going forward. You can see these expenses are increasing rapidly, like by an insane amount. A lot of that sales and marketing, and then you've got the G&A, general and administrative. What we're really noticing is that sales and marketing. The reason that that is occurring is because, as I'm sure you can expect, and as I'm sure you've seen, there's been a lot of commercials, there's been a lot of ads on apps and what have not, because they're actively trying to grow those daily users. As you can see down below, we've got the expectations here. The big thing that I want to look at is average monthly players. As you can see, they're growing by a pretty significant amount. And what we need to see occur is the expectation that this average revenue per monthly user continues to go up. You can see the 3 months ended number, but what's really more important is you can see 2020, that's $41 per person. So if they can grow that number to 1,500, that's straight money to the bottom line, especially if that continues to grow. So this is what we're going to be looking at on the next earnings, is are they capable of growing this number? If they can sort this out, then when we look at something like this, which is the EBITDA, then what you'll see is despite the fact they had a net loss of 350 million, leading them to nearly over 9 months, so nearly 3/4 of nearly 600 million. If we expect this to increase to 900 million, they could be at nearly $1 billion loss in their first year publicly traded, and that is terrifying. However, again, they're actively targeting the growth of the monthly users right here. So if they can grow this, then they'll be set to go. So this is what we're going to be watching. If you want to stay up to date with when we're buying, selling DraftKings or any options associated with them, go ahead and join our Discord down below. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.